your take here is that, yes, we're perhaps pulling back on the day somewhat, NXP not a resounding feeling of optimism, but we're still near all-time highs and we've still got a $4 trillion Nvidia on our hands.
Yeah, good morning. Markets are definitely, the valuations are high. There's no slicing that in a different way. But I guess, you have to look at tech differently than we used to. So a lot of allocators and wealth advisors out there, we've been taught to look at tech as a growth sector. Perhaps it's more than that. So the AI component is definitely tech, but maybe there's also a quality factor there as well. Got healthy balance sheets, great cash flow, especially those mega companies, mega cap companies. It's also got a defensive sector a characteristic as well. We learned that we cannot operate this economy and our society without tech infrastructure as well as software. So I think that when we're looking at tech, we have to look at it from multiple angles in order to perhaps try to explain some of this valuation. It's not just about AI froth, it's much more than that.
But what's been interesting is the AI winners have powered forward on 2025, and those winners have been deemed, well, the Metas of this world, Nvidias of this world. Apple left for dust. In some ways, Alphabet has been a laggard too. How do we set up into Wednesday when we start to get a couple of those Mag 7 names?
Yeah, I think there's definitely a bifurcation in those Mag 7 names. And right now it looks like the people who have really invested and gone forward with AIs are definitely winning. Now, Alphabet, for example, will have different challenges, right? Not only do they have some legal challenges, but, I don't know about you, but when I talk to my friends, they've stopped using Google as a search engine. They're using ChatGPT. And I know that's just a few people around me and perhaps you, but those things can actually catch up. And I know Gemini is improving, but I think that's a real competitor there. And so AI is going to be more important going forward for some of these Mag 7 names. And I wouldn't expect disappointing report from them, but certainly I think investors can read between the lines.
Anna, what's curious about this week is that on Wednesday, Alphabet and Tesla post their earnings results, right? Somewhat analogous companies, some differences. And on the same day, we'll hear from the president about his vision for AI and American AI. It's going to be a wild ride for investors this week, isn't it?
Well, anytime anyone from the government talks about technology and AI and even Bitcoin or blockchain, I get a little nervous because I think we have to tread very carefully here. We don't want to get in the way of innovation, and yet we want to protect consumers, right? So it's going to be it's going to be a balancing act for anybody from the government, from the White House, talking about AI and how America is going to be involved in the development of AI. I would go in with a little bit of a cautious view. And frankly, I'm expecting a lot of lofty statements, but the question always is, how does this actually translate down to the day-to-day and actual software and make difference in our productivity?
Let's bring it back to today's news. What did you learn about the near-term and quantifiable impact of tariffs? You had names like General Motors and NXP show us that actually something's happening here.
Yeah, I mean, something is happening there. We're talking about actual money, right? I mean, so for last week, if you think about the CPI and consumer sentiment, you didn't really see it, right? But you are seeing it in earnings. This is actual cash flow impacts. So I think this is going to trickle in as the quarter goes and give us a better view of exactly what areas of the economy are being impacted by tariffs, who is actually assuming some of those costs. Because GM actually came out and said, we don't want to pass down all the costs to the consumers. So it'll be interesting to see how those things get, diversified into the supply chain and how GM and other companies actually manage those challenges.
And going back to tariffs is all about the geopolitics that is currently involved in technology investing. I think of the geopolitics between the US and China. I think of the latest news out of Microsoft blaming China for a hack. How much do you factor that into your current investment thesis? How much can you price that sort of geopolitics in?
Yeah, I mean, I never thought that this trade talk with China was going to be simple or smooth, right? And this is yet another twist in the plot. I would hold that August 1st deadline date really loosely in your hands. because it was April 1st and then or July 9th and then now it's August 1st. I think that the Trump administration, as well as China, I mean, they have a lot at stake here. So I don't think the deadline really matters. I think we're going to be negotiating until we actually get to a good place for both countries. And August 1st might come and go.
Markets pulled back slightly today, but let's be honest, valuations are still sky high. We're sitting on nearly $44 trillion in equity value, and the optimism isn't going away. A lot of that is built on tech, but it's no longer just about growth. Tech is infrastructure now. The market is finally pricing in that this sector is essential. It's where the innovation is, but also where the defense is when the economy wobbles. We've learned that the economy can't function without cloud services, software, and AI. That's why you can't look at valuation in isolation. It's not just about froth. The winners in 2024, and now into 2025, have been those leading that infrastructure shift. Names like Nvidia are obvious, but others, like Alphabet, have been laggards. Not because of lack of potential, but because of overhangs, legal pressure, AI competition, product inertia. Alphabet still has massive reach. It's just been slower to capitalize on AI in the way Nvidia or even Meta have. But there are signs of catch-up. People who stopped using Google are returning to it for accuracy and search quality. That suggests competitive pressure is actually pushing Alphabet in the right direction. It's still a real contender in the next phase of AI. And that next phase is becoming political. We're about to hear from the president on AI policy. Anytime the government brings up tech, whether it's AI, crypto, or blockchain, markets get jittery. Investors don't want a crackdown that stifles innovation, especially not now when the pace is finally accelerating. Washington is clearly eyeing the space. They want to be involved in shaping development, but the question is whether that involvement boosts confidence or kills momentum. Investors are listening closely this week because this rhetoric is coming alongside earnings, and that timing matters. Tone from the White House could impact how AI names move, especially if we see anything targeting consumer protection, privacy, or monopolistic practices. But the bigger issue Wall Street's tracking isn't just AI or earnings, it's tariffs. Big names like General Motors and Xpeng are already flagging how tariffs are affecting their supply chains. The concern isn't just cost, it's operational impact. If GM is telling us that they'll pass on those costs to consumers, that inflation risk starts creeping back into the macro picture. We're not talking hypotheticals anymore. These tariffs are visible in real-time P&Ls. Investors are watching to see which companies absorb those costs versus which pass them on. That distinction matters for pricing power, margin resilience, and even long-term customer loyalty. At the core of this is China. Every twist in the tariff story pulls China back into focus. Geopolitics is now baked into tech investing. Whether it's AI chips, data center components, or EV batteries, almost every US tech name has some China exposure, either directly or downstream. We're seeing Microsoft subtly point to this. They won't outright blame China, but they're dropping hints. And for investors, those hints are enough to start pricing risk differently. Suddenly, August 1st isn't just another day, it's a deadline, one where decisions on tariffs, trade, and tech investment will clarify. This market still wants to run, but it's cautious now. That's why commentary this week from Alphabet, Tesla, and the White House is going to carry more weight than usual.